It is lower as the pre-open indicated by about 65, 66 odd points.
IT is on the back foot. The Nifty IT index down 0.8% for the day. For the week so far, it's lost about 3%.
Markets at least holding on to that 17,190 mark on the Nifty. We have seen some recovery from the lows.
We're down 40 points. Which basically means that we are back at levels where the market was at 10 in the morning.
But overall, yes, the market, of course, having to deal with the expiry play out, specifically on banks, and lots of pressure there.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action and 5 headlines. I'm Reema Tendulkar, and these are the headlines for the day. Weak global cues following US Fed's rate hike, royal sentiment on Dalal Street. The markets close at the low point of the day after failing to hold on to early gains. The sensex loses nearly 300 points. The Nifty falls 75 points. Bank stocks lead the decline. City gas players say they won't hike prices for now despite the hike in transmission tariff. IGL MGL tell CNBC TV18 they will wait for a decision on the Kirit-Parekh panel recommendations, which they believe will reduce prices. Meanwhile, GAIL says the hike in gas transmission tariff is positive for the gas economy. Hindustan Aeronautics slides 5% after the government floats an offer for sale to sell stake in the company at a discount of 7%. 3.5% of the government's 75% stake will be sold in the two-day offer for sale at a floor price of 2,450 rupees per share. Inflation continues to bite Motown. Auto majors Hero Moto Maruti announced price hikes in the month of April to cope with higher costs of meeting regulatory norms. Even Eicher VECV tells CNBC TV18 it is weighing a price hike of 2 to 5%. Gold shines after U.S. Treasury Secretary Janet Yellen says there will be no blanket insurance on bank deposits, reigniting fears of a banking crisis. U.S. Fed signaling a rate hike pause also supports the yellow metal. And here's a lineup of what we have for you in store today. In Market Opinion, we've got Ed Yardini of Yardini Research and Manish Sonthalia of Motilal Oswal Asset Management. We'll also get you the word from the corporate space with GAIL's Rakesh Kumar Jain and Vinod Agarwal of Eicher Motors. But before that, let's take a look at the day's trading action. Weak global cues roiled the sentiment on Dalal Street. The Sensex and the Nifty ended at the low point of the day, with banks seriously underperforming. The Nifty banking index was down nearly 1%. Prashant is here with a wrap of the day's trading action.
Well, it promised to be a volatile day, and it indeed was a volatile day, especially starting the last hour of trade. The market opened higher, and then it immediately sold off quite aggressively to make the low for the day. Then it came up almost fully, traded flat for about 3 or 4 hours before starting to sell off once again at about 2:30 or so. And we ended closer to the lows of the day as compared to the highs of the day. So, I mean, volatility has been the name of the game. Today was no different. Given the handoff that we got from Wall Street. Wall Street itself, of course, saw a late sell-off, and U.S. indices had closed at the low point of the day. Asian markets fared okay, unlike India. Europe, of course, and we were trading, in the last hour looking at European markets, which were actually in the red. Now, banks lost quite heavily, and the index itself was down 1%. On the Nifty, the cuts on the banks coming in, names like SBI, Kotak, IndusInd Bank, HCL Tech and Bajaj were the non-bank losers that we saw. Now, market breadth turned completely negative given the fact that the market sold off. HAL, Vedanta, Sobha, Shipping Corporation and Home First were some of the big losers that we saw. There were gainers as well, and I'm only mentioning the big volume-led gains here. Spark, JK Tyre, Adani Transmission, Adani Total Gas, Angel One, Triveni Turbine, GR Infra, Craftsman Automation were some of the names that I think made their mark with decent gains on strong volumes as well. It's in a way, even though the Fed is behind and the big global event of the week is behind, it's back to watching global headlines. And I think the big thing there is any commentary which comes through with regards to the government in the US and their intention of backing bank deposits. And I think that will give clarity. On the Nifty, 16,828 on the downside is the important level. Some distance between where we left off and that level. Let's hope that holds on and we come up with better headlines as we return tomorrow morning. Back to you.
Thank you very much for that. Let's move on to the global markets, which remained on the edge as U.S. Fed hiked interest rates by 25 basis points despite the turmoil in the banking sector. Federal Reserve Chair Jerome Powell said U.S. Fed remained focused on its fight to bring inflation down, signaling that there could be further rate hikes in the months to come. He described the Silicon Valley Bank as an outlier. Listen in to what Robert Sokin, the global economist at Citi, and Ed Yardeni, president at Yardeni Research, made of this decision.
Well, I think that the Federal Reserve may very well go one more time by 25 basis points. But I think first and foremost, the Fed and the Treasury are going to have to get their act together and make sure that they're using the exact same language to describe the importance of keeping the banks safe.
Fed is trying to balance its fight against inflation, at the same time maintaining financial stability. So we haven't changed our Fed call. We think they're still going to go to 5.5 to 5.75. I know that's on the more hawkish side, but it's really based on this view that we think that these stresses are probably going to subside over the next several weeks.
In market opinion, Manish Sonthalia, Motilal Oswal Asset Management says that it's a great time to buy IT and pharma. He also adds that private banks are a better bet than public lenders as of now.
Within the next 2 quarters, I would believe that mostly all the negatives of the IT names would get priced in. It's a great time to buy IT, and particularly the sector has seen some very decent correction over the last 1.5 years. And, there is absolutely no interest. So the sector is seeing a lot of disbelief as far as earnings growth trajectory on FY24 numbers are concerned. Cross currency, which was a headwind in FY23, will likely become a tailwind going into FY24 and 25. So from that point of view, I would believe both IT and pharma are great buys at current levels.
Let's move on now to the second headline. City gas players have said they will not hike prices for now, despite the hike in transmission tariff. Speaking to CNBC-TV18 earlier today, the managements of IGL and MGL said that they will wait for a decision on the Kirit Parikh panel recommendations, which according to them will reduce prices. Sonal brings us the key takeaways from that conversation first.
Well, yes, GAIL has been in focus since yesterday because PNGRB has gone ahead and increased tariffs for the integrated pipeline by 45%, and that is something which is positive for the company. Now, let's get you the brokerage view before we tell you what the conversation was like with GAIL and the users of gas, IGL and MGL. Citi has a buy rating on the stock. They say that integrated tariff hike should put to rest skepticism about regulatory upsides. Jeffrey says that see a 17% EBITDA rise because of this tariff hike that has come by for FY24. Morgan Stanley says that this implies an increase of 2,000 crore rupees in terms of revenues and 14% in terms of EPS for FY24. JP Morgan says the tariff hike and lower spot LNG prices from here on are the big triggers for the company going forward. And Motilal Oswal has increased their EBITDA estimates to 13,400 crore rupees versus 11,600 crore rupees that they had earlier for FY24. We spoke to GAIL today and they said it's a good move, though the hike is lesser than what they had expected, so they'll go ahead and appeal for this as well. The EBITDA they expect overall should see an increase of nearly 1,600 crore rupees on current volumes. They transmitted around 107 in quarter 3, 111 last year, and in FY24 they expect volumes of around 122 to 123 MMSCMD, which will lead to higher revenues. Then we spoke to the users of the gas as well, IGL and MGL, where MGL said that this tariff hike could be a gain for some and could be a loss for some depending on what location a particular user is located at. However, if there is a price increase that they have to, there is a tariff hike, they will pass it on to their customers in form of price increases across their products. However, IGL said that while the input costs will go up by 80 to 85 rupees per SCM, they will not be passing it on to their customers as they are focusing on volumes. But both the players told us that on 1st of April, the outcome or at least the decision on the Kirit Parikh recommendations will be made. If that is made, gas costs will come down and that will be settling the increase in tariffs. But yes, the final decision on pricing for both these city gas distribution companies will only come after this final policy as far as gas pricing is concerned. In fact, let's listen in to what the managements told us earlier today.
We are examining the order and we'll go back to PNGRB for review of their tariff order which they issued yesterday. So it's a very early early reaction because we have received yesterday only, and these early study suggests that certainly we will approach to PNGRB for review of tariff for upward revision. PNGRB has notified the tariff for 9 of our physically interconnected pipeline. If you see the weighted average tariff for those pipeline currently is around 46 rupees per MMBTU, which has been increased to 58 rupees 61 paisa. That means there is an increase of 26% for these pipelines, and this increase will result into increase of our revenue and also the EBITDA by almost 1600 crore rupees per annum, only based on the actual volume flow being done by us.
For some customer it will be a gain, for some customer it will be a loss, depending on where they are situated. It will definitely be a pass through, because tariff, there are two ways to look at it. One is that some of the gas we consume for internal consumption, so that has to be consumed by us. For some which we can pass through, this is a sustainable, continual basis, so we can't keep it on our books. It has to be passed through. If it increases, we have to pass through. If it decreases, we have to pass through.
So we are also yet to receive the final impact on IGL, but our preliminary analysis reveals that the input gas cost will go up by say 80 to 85 paise per SCM. And we don't have immediate plans to pass it on to the consumers, because we have not increased the prices for long in the past. We will review these prices as and when Crude Pari Committee recommendations gets implemented. In case PNG, this Pari Committee recommendations are implemented as recommended, I think there will be reduction of around 1.5 dollar per MMBTU.
Let's get to the third headline then. Hindustan Aeronautics slid 5% after the government kicked off its offer to sell stake in the company at a discount of up to 7%. Vivek is here with the details of this offer for sale. Vivek.
Hindustan Aeronautics was the stock in focus today. The stock was under quite a bit of pressure on the back of the development that the government had announced an OFS, or an offer for sale. Now, this was a divestment by the government, and this is mainly in order to meet the MPS norms, or the minimum public shareholding norms. Remember, the government of India held slightly higher than a 75% shareholding as far as HAL was concerned. Now, what's actually happened is that it's a 3.5% stake sale via the OFS route, and almost at a 6.5% discount to yesterday's closing price, and the floor price for the OFS has come in at close to 2,450 rupees, which accounted for the steep fall that we saw in the stock price today. However, some important brokerage reactions coming in, as well as a quant analysis coming in as far as HAL is concerned, as far as the likely treatment of passive indices for this particular stock. So Morgan Stanley says that this particular stock, via the OFS route, will see a likely increase as far as the free float is concerned, and the size of the OFS is less than the market expectations of a greater than 5% divestment by the government, and thereby removes an overhang as far as the further stake sale is concerned. Morgan says that they continue to remain overweight on the stock and would look to use any weakness to actually add to their position. Now, very interesting aspect in terms of a likely MSCI inclusion for HAL. Now, according to Nuvama Alternative and Quantitative Research, HAL was the top contender for the inclusion in MSCI indices in the upcoming May index review. The probable cutoff level post the OFS, according to them, has now fallen to 2,150 rupees a share versus the earlier 2,650 rupees a share. And also they believe that if the stock does get included into the MSCI index, likely flows of close to $195 million could actually aid, and that is why HAL, according to them, remains the top pick and the top likely inclusion into the MSCI Standard Index come the May review.
Thank you very much for that. We'll slip into a break. We'll be back in a jiffy with the other headlines. Welcome back. You're still with us on Markets Today. Let's go over through the rest of the headlines that we're tracking for you. The fourth headline is higher costs incurred to comply with the second phase of BS6 emission norm regulatory norms have forced auto companies to announce price hikes. Hero MotoCorp joined the list of auto companies by announcing a price hike today, a 2% hike from April 1st. Maruti soon followed suit. However, Maruti has not specified the quantum of rise as of now. And this comes after Kia and Tata Motors had raised their prices. Eicher Motors Volvo Trucks, VECV, is also mulling a 2 to 5% price hike. Speaking to CNBC TV18 earlier today, Vinod Agarwal of Eicher Motors Volvo CV said that there will be a price hike, but the quantum of price hike is unlikely to be as much as what the company had taken due to the change in the earlier BS norms. This one would be more or less 2 to 5%. Listen in.
Cost increase this time is not like earlier BS4 to BS6. The cost increases are less. Therefore, we are also expecting the price hike of around 2 to 5%. And then, of course, there is also some inflation impact because April, every year the price increase happens. It's not that in April, so it's a normal price increase plus the impact of BS2 step 2, BS6 step 2.
Let's get to the fifth headline then. Gold shines after U.S. Treasury Secretary Janet Yellen says there will be no blanket insurance on backed deposits, reigniting fears of a banking crisis. U.S. Fed signaling a rate hike pause also supported the yellow metal. Manisha is here with more. Manisha.
Well, the gold prices have held quite firm right now. 25 basis points, as expected, has been the interest rate hike delivered by the U.S. Fed. The decline in U.S. dollar index below 102 clearly has been supportive here. And even as we have seen gold come off its all-time highs in the Indian markets that we saw in this week itself, the decline in prices have led to buying in physical and in gold ETF markets there. So the investment buying seems to be coming back right now. With the kind of inflation scenario that we are working with, speculative buying also on the supportive side, the expectations are that you could be looking at newer highs in case of gold prices in the coming 3 to 4 months as well. For the international markets, after hitting a high of $2,010 per ounce, while we have been chasing or trading within that range of 1940 to 2000, the street believes that every time gold prices come down, it is a buying opportunity. Given the fact that there are still our geopolitical tensions, we still have the Russia-Ukraine war on, the dollar index has declined, the rates while are on the higher side, so is the inflation, and then other asset classes haven't performed so well. So you have seen smart money move into gold and silver, and is the reason you could be looking at supports continuing.
Thank you for that. Moving on to the oil space, crude prices softened following the U.S. Fed's decision to hike rates. However, prices are still up 4% this week. Manisha is back with us with the details.
Oh, well, yes, the crude oil prices are holding with 4% gains in this week, and we have been able to sustainably hold above $75 per barrel. The support comes in from the fact that the U.S. Fed moved in expected lines with 25 basis point of a rate hike, and the commentary is seen cautiously dovish there. The other thing is that the U.S. inventories, while have shown an increase in crude, but they have shown a sharp decline in the product inventories. And on the other side, while the markets are awaiting for the OPEC and allies meeting, which is on 3rd of April, the expectation is that they perhaps would not do too much in sense of moving the supplies, but the comments from here as well is something that the street will watch out for. The other thing is about supplies itself, where we have seen a decline in supplies from US itself since the beginning of this year, and the Russia, while is managing sanctions, also has said that they will cut supplies starting the month of March. The final numbers are yet to come in, but the street believe that with the Chinese demand added to that, you could be looking at some support continuing in case of the crude oil prices. So whether it's Goldman Sachs, Bank of America or Citi, all believe that the crude prices could be averaging anywhere between 80 to 88 barrels on the higher side for the rest of this year.
With that, it's a wrap on this edition of Markets Today. Thank you for watching.